Welcome to Wealth Mavericks. On today's episode, our attorney partner gives you step-by-step instructions on how to actually fund your living trust. And you would hate to leave your loved ones in a place where they are grieving and now they're dealing with all of this confusion and everything going into probate. What do you mean fund my trust? No, it just means taking your assets that you own personally, now moving them under the trust. Welcome back to the podcast. Today, I'm joined by special guest, Ciara Lister. Ciara is our attorney partner at Terra Firma, and she helps our members establish a living trust if they don't already have one set up. Ciara, welcome back to the podcast.
It's always a pleasure.
So we're going to talk about one of the most important but commonly delayed parts of estate planning, and that's actually funding your living trust. This is the part that trips people up because it can feel confusing or just plain tedious. And so they take the steps to actually get the trust created, get it signed, get it notarized, and then it just sits there. But if your trust never gets funded, it's not going to do what it was created to do. And I know I have several members at that stage right now. And as we were just talking about, I'm at that stage myself. So this is going to be helpful for everyone. I want you to talk to us just in super simple terms, step by step, what actions to take to actually fund your trust. But to start us off, just tell us quickly what it means to fund a trust and why it's so important.
Yeah. So I think this is the step everyone gets stuck on because it's actually probably just the most annoying. I think that breaking it down into the different assets and what you actually need to address, and the fact that once you do it, it's finished. So once you've got your assets either properly transferred or the beneficiaries designated as the trust, then anytime you need to make changes, you have another kid, there's a massive life change that changes your distributions, it's going to be this one-time thing. I also think it's probably the best way to describe it is it's a step-by-step process. You don't have to sit down and fund every single asset. There's a hierarchy and there is a list that we give everybody with the trust to go through that is the most important to, not the least important, but the smaller assets that are going to be not as detrimental to go through probate, possibly, there's real estate and then there's a little bank account. So we want to go through and make sure that one, with real estate, we're going to use a deed to actually change the title. I think that's an important thing to kind of go into as well because clients are kind of nervous. They have a lot of questions about, whether their state has a homestead exemption, if they're going to lose any sort of tax mitigation or tax benefits. And the answer is no. Essentially, what you're doing when you change the title to your trust is that you're changing the way that you own it only in your name. So even if they spelled my name wrong, we'd have to file this whole new deed just to get it spelled correctly. I'd sell it to myself with a correct name or like a corrective deed. So we want to make sure that our clients understand. And I think that it makes it less scary if I can explain that we're changing it from Erin, a person, to Erin, a trustee. And now you're Erin, the trustee, who is replaceable. When you're a person, you're irreplaceable on the deed. And so it's just a change in title that allows someone to step into your shoes, leaving you a successor. And that's going to be the most important thing to go through on the funding process. And luckily, that's the one that we help all clients with. So we're going to draft that deed. You're going to get it signed at the same time or after your trust, whatever's convenient for you. You're going to sign it, get it notarized, get it back to us, and then we are going to help you file it. Whether that's, if your county needs you to mail it in, if we can help you e-file it, whatever it is, we're going to give you those steps or help you with that process. Unfortunately, every county is different, so we're going to give you those directions. But the quick claim deed process is pretty simple: getting it signed, changing your name to trustee versus person.
Okay, so funding has nothing to do with money. Like for people who just are not aware at all of this legal language, sometimes that's what people think. Like, what do you mean fund my trust? No, it just means taking your assets that you own personally, now moving them under the trust. So it sounds like real estate, our home is the first thing that we want to do. And so just because we're speaking to a lot of our members again who are in this situation. And then I can use my own personal experience here. We got everything signed, notarized. So to take that first step of getting our house under the trust, there's something in our packet that you gave us that will, and have we filled that out yet, or probably not?
It'll
Was it?
be completely filled out. So it's going to be the quitclaim deed.
Okay.
And it's going to be filled out. We either base it off of the deed that you gave us, or we can help you find the deed. We just need an old copy of the deed, and then we create a new one. But that'll just be you signing it. That is filled out for you.
And then I send it to you. I send it back to you.
Mm-hmm. Mm-hmm.
Okay. Cool. Okay. That's great. That's step
Yeah, and
one.
we're going to give directions on all of that. So that's step one. Um, I
What comes
want to go
next?
back to your comment. It was funny when you said like funding, and funding is probably the word is just scary itself because it sounds like you're taking your assets out of your name. I wish you could call it like directing, like
Yes.
trust directing. So we're going to change that title to trustee on the deed. And then everything else is really directing it to the trust. So we're going to have cash accounts, registered securities, stocks and bonds, annuities, any of your brokerage accounts, life insurances, even retirement plans. We're going to make the trust the beneficiary. So like in your situation, Erin, you can have your husband and then the trust and vice versa. So it'll stay with you guys in control. If you want to have the trust be first, that's okay as well too, because you're both trustees. But that's usually the easiest way to do it is they'll have the spouse, then the trust is the beneficiary. Or if it's flowing straight to their beneficiaries and kids, they'll put the trust as that primary beneficiary.
So that seems like such a simple concept right there, too, that I didn't totally understand that, okay, I'm putting my house in the name of the trust, but now my retirement accounts and my different asset accounts that have money in them, I'm not changing those like from Erin to my trust. I'm changing the beneficiary of those
Yeah.
accounts, which is
And
just
it's going to
going
be
to whoever holds the account.
Yeah. So it'll be completely in
Yeah.
control. The beneficiary is, the trust. You're the trustee. Once you pass away, that new trustee, or if you're, spouse, partners, once the second person passes away, that successor trustee steps in. So that person you chose to step into your shoes financially will go over, say it's like a life insurance contract or your retirement accounts. They'll provide them the certificate of trust, the death certificate, and then they're going to get it to your beneficiaries either by directly transferring it to them or putting it into the trust and distributing it the way you want. So it's really just guiding it to your trust at death. So everything moves at death, but you're funding it by directing those assets. And there's a future, um, you know, trigger that is going to dump all of those into the trust. And that's the funding process.
Okay. Okay. So we have real estate and then we have those accounts where the trust becomes the beneficiary. Is there any other category that then we need to tackle?
Yes, and a lot of your clients do have business entities. So with the LLCs, we always help them with the assignment forms. So essentially you're going to, and that's kind of similar to your real estate, you'll sign an amendment to the whatever operating agreement bylaws, corporation versus LLC,
Mhm.
whatever your state calls it. But that governing document, you'll sign a short amendment to that, acknowledging that you are assigning your interest to yourself as trustee of your trust. So you're assigning it to the trust. The trust is now that, beneficial owner of that. You stay the manager, you stay everything exactly the same. It's just that, again, you're kind of changing your title. So you're in charge of the trust as trustee, you're making the trust the owner. Then when you pass, the successor trustee can step into your shoes. Once again, you can be replaceable as trustee, but you're just not replaceable as a person.
So in that case, it is an amendment to the documents that have already been created. And is that amendment document in the implementation packet as well?
Yes. And that is one where you just have to write in your company name and your own name. So we don't fill that one out for you, but there's two sections you fill in and then you get it signed and notarized. It's going to be that assignment form. So we have them in there for corporations. We have them in there for LLCs,
Hmm.
whatever entity you need to transfer in there. We're here to help with that. We do walk everyone through that during the meeting. But again, I know that we give you so much information. So there's actually a direction sheet on the front page of that too. So it's directions, assignment, amendment inside of there. So we'll have that for corporations and then for LLCs.
Okay. I'm wrapping my head around this. Real estate, accounts, businesses, anything else that needs tending to?
Nope. I think people get really hung up on motor vehicles and stuff. So anything registered at the DMV. Most states, there's a few that, you have to notify the DMV, but almost all states, you just go in there at death with the death certificate and the certificate of trust. So that's really easy, not going to push you into probate. So you just want to make sure you list them so your trustee can find them. And
Okay.
then anything personal, we're going to assign with an assignment form. So all of your personal chattel, your stuff, you're going to become that trustee of your cat, your dog, your refrigerator. All of that will flow through there as well.
Okay. And some of those things that you want to go to a certain person, like you're just going to physically write that down in.
Yeah, so that's what's great about a trust is you don't have to call me when you're like, "Oh, I got a new set of china that I inherited, and now I want that to go to my daughter." You have this living ledger. So we get all the legal forms in there to assign it to the trust, get it in there. It's going to be a blanket of this is all my stuff I want it to go through. But then you have a Schedule A that lists all your property. So those big things, real estate, cash accounts, all of that. Then you have Schedule B, which is going to be personal chattel, that legal term that means your stuff. And you can list that out, change it as much as you want because it's a ledger. So you can change every day where your golf clubs go, where that china you inherited goes, anything like that is completely changeable. And you don't have to, that's not an amendment. That's something you just make sure that you provide your trustee.
Okay. So I know when you deliver the trust documents, you put them in a Dropbox file that then the client can access. I know for me, I moved all my trust documents into like my Google Drive folder. What do you think is a best practice for the people who would handle the trust? Like, for example, if both my husband and I died together, it's like my mom and his brother are on there. What process should we go through to like inform them of this and tell them where it is? And I don't know, is there a best practice there?
Yeah, I mean, that's going to be kind of personal, but what I recommend to people is put it back in that Dropbox. The reason we're using Dropbox is because it's a third party company. You can take it, you can own it, you can kick us out of it, you can log in. It's a small amount of documents, so it's actually free. So you have that Dropbox and you can share that with everyone. If your mom's not tech savvy and doesn't know how to work a Dropbox, give her a copy, a photocopy of the document. She doesn't need an original. A photocopy of a scanned trust or original notarized trust is going to suffice. So we can give her a photocopy of that so she has it. It's always good if they can get the originals. You keep your original in a safe or safety deposit box, or the
Mhm.
drawer of your desk, whatever it might be. You can tell them
Yeah.
where that is, but make sure they have a digital copy. Um, your trustee is going to get that. So it's always good to have it with your trustee. If you put it back in the Dropbox and leave us on there, we'll have a backup copy of it. And then the ultimate corporate trustee that's there behind any other trustee nominations you make, they actually keep it the unsigned copy. So just in case anything happens, there's at least that unsigned copy. But the best thing is making sure your trustees have it, having a backup. You have the physical version, you've got the photocopy, you've got the digital version, and the digital version is going to live forever. It can't really get lost. So
Yeah.
I say kind of the more the merrier, but obviously you still want to keep your documents, private. And if there's beneficiaries that can't know about them, definitely keep them away from them.
Good call. Okay. I mean, seriously, this short conversation has helped me really wrap my brain around like chunking it down because as a one big project, it does feel overwhelming. And so then you just ignore it. But if you take it piece by piece, it's like, okay, today I'm going to work on getting my home deed taken care of. In the next week, I'm going to take care of my accounts, then my businesses. Then, okay, I need to print a copy and bring it to my mom next time I visit her, and then send an email that says, here's where all this is if anything were to happen to us. And then it sounds like we're pretty good to go. Do you have anything to add?
Yeah.
What?
Actually, yeah, the last thing I want to add in there is that I know you have your mom, you said your brother. People are choosing their family members. Sometimes they're choosing young children. It happens all the time. Here locally to us, we'll have, a child come in with the documents. Just want everyone to know that those trustees step into your shoes financially, which means they can do exactly what you did. So they can take that document set, walk into any attorney's office, wherever they live, and physically drop it on there and be like, I need help administering this trust. So it's a important job, but they can lean on anyone, a CPA, a trust company, an attorney. They can reach out to us. We can always help them. They're very standard documents. So it's nice to know that, even if you nominated a young child and, your kid's 21 when something happens, they can go in there, they can get all
Mm.
the help that they need. And so it becomes a really easy process versus, the alternative of them being a young child and having to go through a whole probate court process.
Mm. So it's, I mean, I think that's a great way to look at it, is really a very loving thing that you are doing that, yeah, it's a pretty small chance that my husband and I will, but it does happen. It could happen. And you would hate to leave your loved ones in a place where they are grieving and now they're dealing with all of this confusion and everything going into probate and not having access to any of it. So it is a very loving thing to do, even if it
Yeah, I
feels.
mean, they're going to have to do a lot of paperwork anyway, but at least keep them out of the court.
Yeah. Okay. Well, that was so helpful. Before we wrap up, do you have any other, like, what advice do you give people who are just, like myself included, just not doing it? Just give us a little pep talk, Ciara.
I'm a list person, so we give everyone an implementation guide. Like always say in all of our meetings, the last 2 pages is a checklist, and it goes even sign and date and notarize. It says your trust, your pour over will. So you can go through and check it off. So, you felt good, accomplished it, but we gave you a final checklist. Go through those things. I mean, it even has their last step: securely store it, distribute to your successor trustees. And then when you get to the end of that, you're finished and you've gone through it. It's a
Mm.
very unique thing. Attorneys aren't sending you home with a checklist like that. So I just want to tell everybody, go through it. It's 2 pages, massive font, not that many steps. You got to do step by step. And if you can do one step every day, you'll have your trust done and completed in a week.
That's so good. So you've given us all we need. As they say, you can lead a horse to water, but you can't make him drink. So you have done everything you can to lead us to the water. And now it is on us to do the loving thing and finish this task that is there and needs to be done. So thank you so much. This was seriously really helpful. So Doc, if you are in this place, you have set up your trust, but you have not funded it, or time has passed and there's certain things that need to get in there, let this be your nudge to just get it done. As we know, it is not the most exciting thing on your long to-do list, but you'll feel so much more at peace when it is complete. So as always, thank you for listening. And until next time, go be a wealth maverick.